Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, today we're going to be looking at the CFDs on gold and silver and trying to make some sense of the precious metal market here. Okay, so I've made a small change here to the gold count. I haven't actually adjusted the count itself. I've just assigned primary to my combination count as opposed to my triangle count. Now, if I show you the two, you might be saying, well, what's the difference, Tom? It basically looks like the same thing. But there is a subtle difference, which I explained in last week's video. My preference for the combination being the completed count is purely because I think that this on its own is a far more convincing triangle than this, which I feel is a bit of a stretch because of this initial three-wave move being very long and basically out of proportion with the subsequent moves of the triangle. Now, that's not impossible by any means. I don't want to see an A wave which is ridiculous within a triangle. This is not ridiculous, but it's a little long. If I break this into a three-wave move for a W, then an X wave, then I get a nice series of zigzags to complete a triangle. You know, really nice and clean move here, and I think I prefer that over forcing the larger triangle. Like this whole thing you see is a triangle. That's the difference. Now what this does is it gives us two invalidation points. The primary invalidation point, in the way I interpret it here, is at 1780 spot 36. If we go through that, this interpretation is incorrect. We do get one lower invalidation point here where I have the E wave for the completion of the triangle count at 1753 spot 10. So we have a bit of a clutching at straws moment if we do break the primary invalidation point at 1780. But either way, we want to see continued bullish price action for either count, really. So how have I interpreted that thus far? Well, so far I see a clean impulse of 5 waves up and a 3-wave move back. So I see 5 and 3. Now I decided to I'm already long gold long term. Everybody knows that. I'm a gold bull, a bit of a gold bug, to be absolutely honest. But I decided to take a trade yesterday on the long side purely because we've done quite a lot in this retracement already. It may not be done. I have a tight stop on it, but it may have further to go. But my attitude yesterday was there was so much bearishness towards the Fed meeting for equities and in precious metals as well, that when the crowd is basically supplying a big pool of liquidity on the short side, the market will normally go in the opposite direction because the crowd tends to be wrong over the short term. And there was an awful lot of bearishness around across the place. I even saw some posts on social media saying the most important statement made by central banks since 1980. It's like, what are you talking about? It's a 50 basis point hike. Okay, biggest rate hike in 20 years. Yeah, because the last 20 years the entire economy has been a fucking joke. Pardon my language. So it's a big deal for the last 20 years, but interest rates have been above 10%, 12%, 15, 16, 17% in the States before. So a 50 basis point hike, given the inflationary scenario we're in, shouldn't have been surprising or shocking anyone, really. And I've already expressed my opinion about how I feel about the Fed and how I feel about their rate-raising cycle, quotation marks. So we're not going to go into that there. I'll save a rant like that for the live stream, as people seem to enjoy me going off on one. But anyway, getting back to the point. 5 up, 3 back. There could be a sub-wave within the 3 here, meaning that we get a 1, 2, 3, 4, 5 for the C for the 2, and we've got to come a little lower. Okay, but that could be enough. So shall we have a look at some Fibonacci retracements and extensions and see what we're dealing with? Now, I've already suggested that I feel this downward sloping trend here from the triangle. This could be support. Now, we haven't quite got to it, right? And depending on where you put the trend line, you take in the tops of the bodies of the candles as opposed to the wicks, we can get them all to line up. Okay, and then we get something a little like this. So as you can see, we haven't quite come back to it. Let's just switch off the vlog. Now, we don't have to, but it's quite common for a triangle pattern having broken out for the prior resistance to become support. That just tends to be a rule, whether it's a trend line of a triangle, whether it's horizontal support. It's very observable. So far from the base of the triangle as we have it here for our combination count, we have retraced 707, right, on my fib. Now, this is not as strong as the 61.8 or as strong as the 78.6. It tends to be just one of those. I only include it because it just, if one of the other two doesn't crop up, for some strange reason, this tends to crop up. Now, I have no explanation as to why that is. I don't consider it a particularly strong relationship. I would much prefer to see us having stopped at the 61.8, but with the initial move seemingly to have come down to the 618, a deeper retracement makes more sense. So there is the probability that we're not done, and since we haven't found support at the 618 or at the 78.6, more traditional Fibonacci retracements, that suggests that we could still roll over and go lower. So I may have been right in the short term, but I might have gone long yesterday, but I might be wrong in the longer term. But in the longer term, I still think I'm right. So, okay. Have we got anything else to look at there? Not really. So let's remove this. Now look at the relationship between A and C. So if we come down to what I've got as my A. Yeah, I need to adjust where I place that. Excuse me, that's in the wrong place. There we go. So A, I then have a flat into a B, and then 5 down and a C. We haven't quite made it 1-to-1. Now we don't have to make it 1-to-1. Okay. That's a wave 3. Right, so there's the 61.8 of A. We've come through that. If we come through that, it's quite typical to go to 1-to-1, if not beyond it. So, like I said, we'll have to now. It doesn't have to be. We could have done enough. It could just be a slightly shorter C. Corrections, zigzags specifically, tend towards parity, but they only tend towards parity. That doesn't mean they have to be parity. You know, you can have extended A's and short C's. You can have extended C's and short A's. You can have extremely extended A's or C's. But as a loose rule, they tend towards parity. So close to the 100 might be enough to consider it parity. You see what I'm saying? We're not a million miles off, are we? Alright. But what we will need out of here is some impulsive price action. We want to see this low translate higher. So if we come into the 4 hour for a minute, we can take our 5-wave structure down here, which I think is pretty solid, and we'll just put an invalidation point over the shorter term here. This wick here. So a move back above here, the idea of this being an extended wave, which you can easily see that it could be, right, means that we would move the 3 to here, and then the 4's got to come in yet before heading lower. Now the 4 can't come back beyond the 1. Alright, this is not subdividing as a diagonal. There's no overlapping. Alright, it's subdividing as an impulse. So if that's the case, we don't want to see the price come back above here if it's going to continue lower. Now if it does come back above here, that's a positive sign for the bulls. Right, that's a positive sign. Let's just get the coordinates right. That's a positive sign for the idea that it did complete down here. Right, so far I think we could label this, 1 and 2. Now this could be 1, 2, 3, 4, 5. That would be my bet for a longer 3, 4, 5 into a 1. We'll see how that unfolds. If we get an impulse out of here and it breaks this level, looking for a 3-wave pullback to enter long would be a good idea. So that's how I'm seeing the thing so far. So that's the bullish count. Like I said, we've got the triangular alternate, but it's basically the same with a marginally different bullish invalidation, which I've already covered, so we don't need to go over that. So now let's just look at the bearish case. Okay, that's the longer term count. Turn off the primary. Need to add that in, and that into the primary for the short term. Okay, delete that. Alright, so the flat idea. Right. Now, this, in my mind, and I'm talking from a structural point of view, in terms of how it's come about, how it looks, has the same probability as our bullish count, because it is essentially the same thing. Now, you've got 3 waves here, that's the same. You've got a connected wave here, A. You've got a B wave triangle, and 5 up into an impulse of a C of a B. And then instead of this being A, B, and C, this is 1, 2, 3, 4, 5. And we'll come down in a C. So, although my primary is bullish, and I'm leaning that way because I think it fits the larger geometry of my preferred pitchfork over the long term. I'll have to show you that. Let's just have a look. Here's my long-term pitchfork based off of the primary 1-2 pivot going back a ways. And as you can see, these levels, if I bring up the full pitchfork for a moment, that one, I've got to save that as an original. I don't know why I saved that as a shift. Right, so as you can see here, we've got 38.2, 23.6, median line 23.6, golden zone 50, 89, 78, 78.6, 78.6, 78.6, golden zone back test, golden zone again. You see 50 currently, so 78.6 currently. So as you can see, the whole thing is constantly being bounced around this pitchfork like a pinball machine. I'm favouring the idea of 1 into 2 because it keeps this long-term bullish structure of 3 into 4 intact without breaking it, so we can continue off in 5. Now, that is not a set rule either. It's just an observation of mine that once you set that primary degree pivot, you tend to maintain trend within it, if that makes sense. So the flat would break this, you see, which I don't think is by any means impossible. I just think it's less likely given the support this thing has provided for price and the way we've interacted in this bullish move up. Here's the golden zone again, here's the 23.6 again, here's the 38.2, here's the 78.6, here's the median line, you see it's fucking everywhere. Okay, this thing's in constant play. So if this does represent the long-term trend based off our primary 1-2 pivot, I would expect this to hold. Okay, now that doesn't mean it will, or it has to, I just would expect it to. And therefore, even though the flat pattern has the same structure as our bullish count does, bar the 3 into 5 rather than A into B into C, 3 into 4 and 5, I have to give it the alternate because of that bias towards that long-term piece of geometry. And that's really all that's splitting the difference for me at the moment. Okay, so that's the way I see gold. Break this invalidation point at 1780, we can start to get more concerned and think that the flat pattern is more likely. The one count I can't really get on board with is the idea that this is somehow motive, because I just can't see it, and this is somehow a 99.8% wave 2, which is just has got to be rarer than the options we're looking at. So I haven't included it, but I'm never going to say it's impossible because I'll never say never. It could be correct. It didn't fully retrace, and therefore it could be correct. Alright then, so that's how I see things for gold from an Elliott wave point of view. Let's just have a look at the indicators here for a moment. Oversold reading, we hit here on the daytime frame in the RSI, got down very oversold, having done a round trip within a zigzag. That's pretty nice look for a completed correction. Maybe that's why we got a shorter C. If it is, it's because we did enough. We went from overbought to oversold. Now, nothing saying it can't be 3, 4, 5 deeper oversold, but that looks sufficient from a momentum point of view, right? From having retraced, having sold off enough. MACD bearish momentum has been weakening, but there is no bullish crossover between the signal and the average yet. Although it is weakening, we want to see this crossover push back above the zero bound with bullish momentum. Nice large readings on the histogram here showing some bullish momentum, because it should be very strong coming into here, because if this is 1 into 2, we're coming into a 3, so everything should really start to blow up here. Now on the longer term count it's 3 into 5, but it's still a wave 3, so it should trump easily the wave 1. We would have thought get nice strong overbought conditions in the RSI, nice strong rising momentum here, much more so than what we've seen during all this corrective period is what I would expect to see going forward, given my bias towards the primary count. Now, like I've already said, that could all change depending on price action. Right, moving averages, how are we looking? So another piece of support here is we've come back roughly, not pretty much just missed it by a cent or two, we've come back to the 250 exponential moving average. Now this tends to be support for the larger pivots, longer term corrections on an uptrend, or even the swings within a corrective trend itself. So what do I mean by that? So for example here, we get this swing down to the 250, get big strong reaction from it, swing down, test it again, then it finally breaks and we dump. Then we get this coiling pattern around it, okay, where we don't regard any of the moving averages as support and resistance. We're too busy swinging around them very triangularly, if you know what I mean. Now we've broken out, trending back above the 10, the 20 and the 60. We break it in a three-wave move to test the 250. That feels like a classic zigzag. Right. Now if it bounces from here, that will have been a classic zigzag, and we've got that 1938 level to support that. Okay, so that's how I see the moving averages. So now we've done gold, I think we'll come over and have a look at silver. Okay, let's just delete that mess there. Then let's come over and have a look at silver. Here we are on the day time frame on the CFDs on silver, and let's bring up our bullish count first. Okay, so what can we see here? Different structure from how gold has formed, but I have this in a 1-2 instead of a 3-4. Now when I said that silver and gold roughly do the same thing, I say roughly because they are doing very different things as well. We have to keep in mind that gold cleared its previous all-time highs, whereas silver is a bloody mile from them. So I have silver completing a primary 2 heading into a 3, while gold completes a higher wave degree heading into a 5. You see, so gold's already done a lot of its work, whereas silver's got a lot of catching up to do. Historically, that's very much the case. When we look at the gold-silver ratio historically, it tends to be the case that when people want to buy gold for protection, by the time the crowd arrive, gold's very expensive, having already corrected in or priced in a lot of the worries, whether it's inflation or war or whatever. Gold has already priced in a lot of that, so people look at gold and go, bloody hell, I can't afford to buy gold at this per ounce. So what do? They buy silver, and then silver then plays catch up, you see. It's not always the case, but it is quite a common occurrence throughout history. So that's very much what I think is playing out here, because we have 1 into 2 rather than 3 into 4. And we will come and clear the previous all-time highs. So in that a current count, I've got it as a diagonal into a 1, A, B, C into a 2. Okay, rather than an impulse from a completed triangle like we have in gold. Now it's a very deep 2. Okay, and we have to always be a little suspicious. We've come through the 61.8% retracement. We've come through the 707. Now in log, we've bodied the candles on the 78.6, pretty much precisely. Here, out of log in linear, we've wicked down just shy of the 89. So it's just a deep 2, you could argue. Now the extension, if we come down to the 4 hour here for a minute, there's a strong, very powerful extension in the wave 3 of the C here. That's why the C itself is extended and significantly longer than the A. Now let's just have a look at the relationship between these two. Now look at this for a relationship, okay? Let's switch this into a wave 3 extension. Where do we come to? We come to exactly, I mean literally exactly 1618 of C equals A. 161.8%. Now the most common extension in an ABC, or the most common relationship between corrective waves, is to tend towards parity, but like I said, they only tend towards parity, they don't have to be. The next most common extension by far is the 1618. Now we stopped there and turned around. Now it could be a 3, right? 1, 2, 3, 4, and this is bearish, and down we come. However, having stopped and turned around here, because if we'd broken it, I would have been more bearish, but we bounced off of it, so it has all the hallmarks of just an extended C. Right. Yes, it could be a 3, but think about it in the context of the broader count. Let's have a look at our RSI readings down here. Brutally low. Right. We got wrecked down here. It's like 12.6. We haven't. This is the 4 hour. On the daily, if we come down to the daily, it comes down to 18.11. Now we haven't seen a reading that low on the RSI since March 2020. Right, so that's a really strong bearish move. You can say, well, yeah, it is because it's a free, Tom. It's the start of a huge thrust down. Fair enough, that's possible. But it could just be the first deep correction of a new trend higher. When you see such a strong move down, what does your count tell you it could be? Well, if it says a 2 and it's a zigzag, zigzags are the most aggressive and violent of corrections, and 2s tend to be deeper than 4s, and it's come down to seriously oversold conditions. So you see what I'm saying? You've got strong arguments in both ways here. Strong arguments from both sides. My preference is for the bullish count. I've explained why, because of my preference for the bullish count in gold. They're not the same thing, I know, but I would be expecting them, even at different wave degrees, to be doing roughly the same price action and correcting and then moving higher. So perfect trend extension there. Make of it what you will. Invalidation point 23.23.432. Break this and this bullish count is wrong, and fair enough. Now on that note, where would I expect it to go if it is a bearish count? So let's look at that. We've got this now, that's nice and clean. Same with gold. We want to see a thrust back up into overbought conditions. We want to see a move back above a zero band with strong histogram readings here when the signal crossing the average to get that bullish momentum in a 3 underway. So 1, 2, 3, 4, and off we go, pushing higher into what will eventually be intermediate 1 of 3. Right, I haven't even got this as intermediate 1, I've got this as minor 1 because of the scale of primary 1 and the larger degree, cycle degree. I've got it going back all the way to the GFC 2000, and I say GFC, it's actually 2011 top. I'd have to go and have a look. Either way, it doesn't matter. I'm getting distracted. Here's the bearish idea then. It is a 3, right? But it's 1. Actually, with no point changing, that should be a flat. I'll do that. This will be 3 at the 1618. That'll be 4. This will be 5 into A. Yeah, I screwed that up. So let's try that again. 1, 2, 3, 4, 5 into A. Right. B will come back to retrace 50 something, whatever percent. This pitchfork is just randomly placed on my suspicions, okay, of completing a way to it, the golden ratio. That's all that is. So it's another zigzag again. Zigzag W, X, zigzag Y, flat X, zigzag Z. It's a triple zigzag. Alright, and we're going to get a lower reading down here at... That's pretty bloody aggressive, Tom. So I'm looking for a log target? Yes, I was. Deeper retracement and looking at log, but it don't have to be. You know, looking at it, 61.8 could clear it quite comfortably down here at the 61.8. So let's just move everything up there a notch. This is all guesswork until we break down through those previous levels. If we invalidate the bullish count, we can start to look at this. How does that line up? This is not a desirable or textbook way of using a pitchfork. It is my preference for trying to understand the larger geometry, means that I want to try and get ahead of it to some degree to try and make it make sense for me. So 1, 2, the 1618 extension was a 3, come back in a 4, in which case we can't invalidate the 1, right? So that's something to look for. Then we go A, B, C, down to complete the final Z of a W, X, Y, X, Z triple zigzag to a 61.8% retracement of a wave 1 into a wave 2. That's how I see silver. Now moving average wise, way more bearish on the daytime frame than gold. 10 is through the 20, 20 is through the 60, 60 is close to crossing the 250, which is traditionally on the daytime frame, as I pointed out many times before, a sign of an impending low. Not necessarily an impending bottom, but an impending low. So perhaps you're going to get a move back up, a move back down, death cross, and that whole thing could be A, B, C, and you only needed to come down to here to get the Z, rather than all the way down here. All conjecture at the moment. Could go either way. My primary count is bullish. and I have a clear invalidation point, so that's what I'm going to stick with. Okay, like I explained, I prefer it because of what's happening in gold at the moment, which I think makes sense. Now, if I could show you on here, but for some reason I can only bring up on the VPVR or a fixed range volume profile, I can only bring up so much volume data. No volume data, you see, it says here. Now, if I come in a bit closer, it brings it up, but that's no use to me for what I want to show you. So I just want to pop over to the SLV chart for a minute, where I can look at this move on the daily. Let's come back. Okay. And you can see how, switch off of log, you can see how we've got this big range of volume, gigantic gulf here, and then we've got this here. Now if we come out further, this gets a little bit bigger, see, because it takes in more and more price action. Now eventually you get to a point where you've got point of control running through all of this, across the 707, here's a peak of a volume, the 61865, we all start to bump into more important ratios down here, okay, and we've got this gulf below us. Now I've always maintained that if we get a violent breakdown into here, let's say that would be the A in the bearish count, can be the C will zip through here and come through all of this empty space to find support nearer the point of control. The market so far has been determined not to come into this void. It just wants to stay out of its way, because I think the inevitable would happen, which is we would just collapse down to here. We'd break down into this to try and find support around here, structural support, right? Fill these gaps in the chart. That's always had me a little concerned, to be honest. So that's just what it is. We just have to deal with that. Stay bullish for the meantime, but we want to see bullish price action off of the low, an impulsive move higher, supported by momentum, supported by volume preferably, because we're now heading into the early part of the wave 3 by that logic, so it should start to build up from here. Alright guys, that's gold and silver for you. Thank you very much for joining me on this technical analysis of gold and silver today. If you're new to the channel, you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a massive thank you to all my Patreon subscribers. Your support is greatly appreciated. The next live stream will be at 1 PM BST on Friday. Looking forward to it. A lot of requests for stocks and commodities and all sorts of stuff and cryptos already. If I can't get through all of them, guys, I will put out a weekly exclusive covering the rest, maybe at the weekend. So till I speak to you again, take care, and if you are interested in joining the Patreon, there's a link in the description box below. Click on it, head over, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up, as it is still early in the month. And if you're not following me on Twitter yet, there's a link also to my Twitter feed in the description box below. Alright guys, take care, and I'll be back with you soon. All the best, bye bye.